afternoon, good evening. Hello, everyone. My name is Destan Kirimhan. I am an assistant professor at the University in Turkey. It's a great honor to salute you as one of the research chairs of the Global Conference on Services and Retail Management that is being virtually organized by the University of Naples Federico II and the University of South Florida. Please allow me to introduce our moderator of this panel titled The Impact of Blockchain Technology on Services and Retail Industries. Dr. Philip Gibson is an associate professor of finance and director of certified financial planning at Winthrop University. He is also a certified financial planner and a financial advisor at Carroll Financial and Associates. In 2020, Dr. Gibson was inducted into the Investment News 2020 class of 40 under 40. This recognition is given to young advisors and associated professionals who build and expand the financial advice industry. He was also inducted into the inaugural class of the Association of African American Financial Advisors 50 under 50, a program that recognizes and celebrates influential Black African American licensed financial advisors, planners, consultants, and operations administrative executives in the financial services industry. Dr. Gibson, welcome, and the stage is all yours.
Thank you for that wonderful introduction. Good afternoon, good evening, and good night, depending on where you are. So again, my name is Philip Gibson, and it is a pleasure to be here with you all at the 2021 Global Conference on Services and Retail Management. I am honored to be the moderator for this panel. Once again, the title is The Impact of Blockchain Technology on Services and Retail Industries. I would like to start by introducing our esteemed panel of speakers. First, we have Dr. Destan Kirimhan, who is an incoming assistant professor of finance at the University of Texas, El Paso, and associate team member and research fellow at the Digital Euro Association. She's also a member of the Crypto Academy. Her areas of expertise include financial intermediation, stability of the financial markets, financial regulation, and the use of blockchain in finance. Next, I would like to introduce Dr. Tekming Tan, who is an assistant professor of marketing at the University of Oulu. He is a city representative of the International Token Standardization Association that is based in Berlin, a member of the Blockchain Forum Finland, and an external advisor to the Helsinki Blockchain Center. His areas of expertise includes branding, marketing tools, humanizations of brands, and of course, blockchain. The third member of our panel is Dr. Murat Kizildag, who is an associate professor of hospitality finance and the head coordinator of program assessment in the Rosen College of Hospitality Management at the University of Central Florida. Dr. Kizildag sits on several editorial and advisory boards of top-tier international academic journals, conferences, and organizations. His areas of expertise include security valuations, risk and investment analytics, financial modeling and forecasting, optimization, time series analysis, and once again, he's an expert in blockchain. Recently, he published a paper that was titled Blockchain, a Paradigm Shift in Business Practices in the International Journal of Contemporary Hospitality Management. So what can you expect to hear from our panelists today? Well, Dr. Kizildag and Dr. Kirimhan will be talking about blockchain, some of the myths that you may have heard about with blockchain, and how this can be used to facilitate payments and improve other areas within finance. Dr. Tan will be discussing some of the issues of the sharing economy. He will also be sharing some research insights and ideas as it pertains to blockchain within the retail and services environment. At the end of the presentation, the panelists will be answering questions, so please send your questions my way. So at this point, I would like to turn things over to Dr. Kizikdag and Dr. Kirimhan, and then Dr. Tan will follow. Thank you.
Thank you so much, Philip, for this great introduction. And as Philip said, my name is Destan Kirimhan, and I got my Ph.D. from University of South Carolina, Darla School of Business from Finance Department. And I'll be joining to University of Texas at El Paso as an assistant professor of finance. And I'm an associate team member and also a research fellow at the Digital Euro Association. And today, let me share my screen with you. So we will be talking about blockchain mainly, and let me share my focus today with Dr. Kizildag. So first of all, we know that there is the Bitcoin, and now we are hearing about, thanks to Elon Musk, all the tweets about Dogecoin and the other coins, and what's happening in the cryptocurrency market is just one thing. But today, we would like to focus mostly on the technology behind Bitcoin and other cryptocurrencies, that is the blockchain technology. So just to set the stage for what is the blockchain, we're going to just define what is the blockchain and what is the difference between the centralized system, the traditional system that we currently have in financial markets, and how it's now differing in the decentralized way. So why it's needed is one other thing that I'll be talking about. And then Dr. Murat Kızıldağ will talk about the blockchain use cases, especially in the financial services industry, because this has started with Bitcoin and it was defined mostly in payments and financial markets. So we're going to first talk about the use cases in the financial markets. And then Dr. Terence Tan will also talk about the issues and challenges faced by retailers in the sharing economy, and how can blockchain provide a solution. Briefly, he will talk about this. And then, yes, we are appreciating this technology, but there are some also disadvantages or doubts that the retailers are going to adopt when they would like to adopt the blockchain technology. And then we're going to take your questions and what's the next step in this decentralized markets that we can talk. So how did it all start? So we probably, all of the participants know that there is the Bitcoin white paper that was published in 2008. So it was right in the middle of the financial crisis, or the beginning of the financial crisis in the US, and it then turned out to be a global financial crisis. So the Bitcoin was kind of a rebellious, some parties just saw this, considered it as a rebellious action against the traditional financial markets, where we have a trusted intermediary like financial institutions such as a bank. So Bitcoin has the peer-to-peer electronic cash system, and this was published by Satoshi Nakamoto, which was claimed by a Japanese businessman, but we actually really don't know who this person is. Is it a person? Is it a group? Is it an AI? Is it a supercomputer? Or just one of the authors that was referenced in this white paper? But all we know is that it was trying to build a purely peer-to-peer version of electronic cash system that would allow online payments to be sent directly from, for example, me to Murat, like one peer to another peer, without going through a financial institution, which is a trusted third party. So there is a system that we need a trust. If you're trying to get rid of or eliminate, in other words, the trusted third party, such as the financial institution, we need to build a trust mechanism in this peer-to-peer electronic cash system. Because here, we all know that we don't know the peer that we are involved in the transaction, and that peer also doesn't know me. So we just want to have a trusted intermediary that collects my identity and all my other information, my financial status, and without sharing it with the other peer, that it builds a trust between us. So we have to have something as a substitute to this system. So the Bitcoin aimed the first thing here with the blockchain, just if you want to eliminate this third party, how can we build trust? And the other thing we need is the double spending problem. Just basically, if you have just $1, you cannot spend this $1 twice on any other thing. So it has to have just $1 spent on one thing. So we're going to look at these, but there are some speculative things about Bitcoin that people say this is a bubble, it's going to burst soon. But we want to focus on the revolution. It's the technology behind it, which is the blockchain. And there is a highly recommended book and a bestseller here, which is The Blockchain Revolution, How the Technology Behind Bitcoin and Other Cryptocurrencies is Changing the World. And if you're interested in this, there is also another book, Blockchain Revolution in Financial Services, as well as Blockchain Revolution in Supply Chain. So let me compare the centralized versus the decentralized financial system and why we need this blockchain system. So in the current traditional financial markets, which are centralized system, if Alice wants to send $10 to Bob, it has to go through a trusted intermediary, which is a bank. And the bank collects all the data from us, our identity, our financial situation, maybe our where we work, and our address. So we probably need our zip code if you're in the US especially. So it collects all the data to build the trust. But there is the point that when it's collected under a centralized system database, it's just open to data breaches, data leakages, hacking, and all other things, or just simply failure in the operating system. So remember the last time you went to the bank, maybe before COVID-19 pandemic, and they may just told you that they're having an issue in their operating system. So maybe you need to come back in the afternoon or maybe the next time. And this is only working through it's not 24/7. You can't go to maybe at weekends or just holidays, and it's not 365 days in a year. And you need an identity, which is another thing, because it's not going to be inclusive. Suppose there are some refugees that are having problems, such as wars in their country. So they need an identity to be involved, included in the financial system, so that they can, for example, take a loan or like a mortgage to have their houses. So the other thing is like you cannot make micropayments with your, for example, credit card. If you want to make $1, you cannot do it via your credit card. So for the micropayments, it's also not very inclusive, the current system. So the blockchain network is offering a decentralized system where Alice pays Bob $10 with a peer-to-peer transaction without having a third party. So which is on-chain, which we call the blockchain. So it's a system that facilitates the connection between peers. And what is a blockchain in a nutshell? Well, we can think this as a specific type of distributed ledger. So a distributed ledger is a database existing in many places. That's why we call it decentralized or distributed, with many nodes, which are participants in the blocks, in the blockchain network. So here in the first picture on the left, you can see that there are some computers or maybe mobile phones or tablets. So you can have these nodes as participants in blockchain network, and all they do is they keep track of the transactions and they store them. So we have distributed ledgers everywhere around the world. And it is an efficient system, especially compared to a decentralized system now, because in today's system, maybe you've heard what was going on in Wall Street, and it also made it to the Wall Street Journal as well, which was about the GameStop stock. And the CEO of Robinhood said, well, we couldn't do anything because there was the T+2 in the payment system to real transactions to settle down. So we have the T+2, which is 48 hours is needed when you would like to really do the things electronically to be in real cash. But in blockchain, you just need 10 minutes, and it's now becoming less than 10 minutes. So it's becoming efficient, it's becoming faster. So what is blockchain and how does a transaction get into the blockchain? I'm going to just explain simply. Suppose that Alice wants to send $10 to Bob, which is a transaction which is requested and authenticated. So Alice just sends with her private key that Bob doesn't see the private key, but only the public key of Alice. And she just encrypts this transaction on the chain. So it's just one transaction. In the second stage, suppose Murad buys a $5 coffee in the morning, and Phil gets his salary, and Terence wanted to pay his electricity bill. So we have transactions batched together and shared in a block. So this block of transactions are now in the third step, sent to every node that are participants in the blockchain network. So there are some participants and special participants that we call them validators, or in Bitcoin blockchain, there are some miners, which is called Bitcoin mining, that via a consensus mechanism, they build trust. And in Bitcoin, it's called the proof of work. So there is, suppose, a very complex password that these validator nodes are trying to solve this password. And the first one to solve gets a reward, which is in terms of Bitcoin. All it does, it uses the computer power to solve this complicated password and share its, like as we take the exam, we would like to see what computations that the student does. It's just proof of work. So this first solver just shares all its proof of work, like the computations it did to solve this password. It shows it to other nodes, so it's validated. Then this block is added to the another block. So it's a block of transactions that are shared in chains, and they're all time stamped. So if you look at the one thing, it's like May 10, 2021, 2 p.m. And then the next block is going to be after 10 minutes. So it's going to be May 10, 2021, 2:10 p.m. So they're all time stamped. So it's not very easy to go back and change all the transactions to really hack the system. And this update is distributed across the network. So all the nodes that are participants in this blockchain network has all these transactions stored in their ledgers. And this is very close time. So it's very efficient, close to real time, and it's around 10 minutes. Now it's going to be less than 10 minutes in most of the other cryptocurrencies, actually. So in a nutshell, if you look at the decentralized system, there is really no single point of failure because it's distributed ledger and it's stored everywhere almost. And there is the trust protocol, there is the consensus mechanism, either it's proof of work or proof of stake and other types of trust protocols that we don't need to really have identity. If you're a refugee, for example, and our identity ID card is lost, we actually don't need it. We just have the email address with us. So it's encrypted and it's really close to real time. There is nothing called T+2 here. So it's more efficient compared to the centralized system. So you may ask the question, is it just payments or profits? No, it's programmable to record and track virtually everything that can be expressed in code. So it could be birth and death certificates, marriage licenses, titles of ownership, even educational degrees, votes, medical procedures, insurance claims, and even every ingredient in our meals. So it's the tokenization that you have the process of converting the rights of an asset to a token that is expressed as a code on blockchain. And there is smart contracts, which is another type that is coming in the blockchain. So it's defined mostly on Ethereum blockchain, or yes, the Ether is the coin, Ethereum is the blockchain. So think about this as you have the solar panel, and your solar panel is just smart enough to communicate with your neighbor's solar panel and look at your electricity storage. And if you need electricity, and if your neighbor has the surplus of electricity, it can start and complete a transaction on-chain with smart contracts. So is it a scam or an alternative to existing traditional system? So if you just look at March the 1st, 2020, just start of the pandemic, the Bitcoin price was around 8,500, and just a little bit over than a year during a pandemic-led economic crisis, on May 7th, it was around over 58,000. So if you look at it, it's almost sevenfold. So I cannot think of an obvious other investment tool that may bring this much of rate of return to you. But there are some also additional things. For example, Elon Musk, like celebrities are, or let me say scientists are also involved, as well as the other celebrities. So he said that I've always felt that Dogecoin was in a way Elon's private stimulus for the people in a pandemic. And he just replied that that is how I feel about it. But on the other hand, Warren Buffett just blasted Bitcoin as worthless delusion. And he just first called it as rat poison. And then when it skyrocketed, he just said that it's a rat poison squared. So there is still ongoing debate around if it's a scam, if it's going to be a bubble that's going to be burst soon, or an alternative to existing traditional system. Some countries started regulations, especially like most of them started regulations. But there are also digital currencies that are going to be issued by central banks, which we call central bank digital currencies. And a digital dollar project to kickstart 5 different US CBDC pilots that are going to be launched over the next 12 months. And also there is China's digital yuan, and it's trying to find a way to collaborate with MasterCard to seek the role of a bridge to facilitate cross-border payments and use digital yuan. And also European Central Bank is doing the CBDC survey, and it finds that the privacy is the #1 concern for digital euro. So how it started? It started with in May 28, 2020, Goldman Sachs slamming Bitcoin, and the crypto community was reacting to it. And how is it going? It's going from Bitcoin to actually what is the technology behind it, which is blockchain. And the Goldman Sachs engineering team is analyzing how blockchain might be used across the bank, from asset management and global markets, from ESG to trade finance. And now it's time to Dr. Murat Kızıldağ to take over and talk about a little bit of financial use cases of blockchain. Thank you so much.
Dr. Kirimhan, thanks so much for the great introduction about blockchain and its system and the structure of the system. You can please proceed with the slide. So, hello everyone again. What am I going to do next in the next 10, 12 minutes or so? I will talk about blockchain systems, and I will talk about the usage of blockchain along with the implementation of blockchain in mostly financial services. And of course, I will boil down to service and retail industries to see how they are adapting, what's going on over there, or what might be the possible areas to adapt the system, the entire technology system in their operations. So before I start my presentation over here, I would like to clarify that I would like, maybe this might be the great question, or the many of you might have this question. Blockchain and cryptocurrencies, they are not the same thing. They are the same thing, but they are not the same thing. So I don't want any of you to mix the blockchain systems or the blockchain structure with the cryptocurrencies in this presentation. Cryptocurrencies are the unit of measurement that is implemented in the blockchain system. Blockchain system is the bigger umbrella, is the bigger picture that represents the entire technology. So having said that, let me just talk about the blockchain on mainly tracking and service customization. So I'm talking about the service retail industries mostly over here. Integrated systems or for operations, data protection, security, data breach, and some safety issues as well. Destin? So payments and e-commerce is the most eminent area that we can see blockchain systems are already implemented by main players in the world. Main players such as IBM, could be Tesla, the most eminent and obvious example, of course. So the question becomes, how are we going to use payments and e-commerce? Or let me just back up, I'm sorry. How are we going to use blockchain systems for payments and e-commerce? Cryptocurrency payments, again, remember, when I said cryptocurrency is the unit of measurement up in the air of the blockchain system. DeFi contracting, DeFi stands for decentralized contracting. They are called smart contracts with digital IDs. I will touch base with it a lot. Investing and financing, of course, in service and retail industries, investing and financing, it has to be there for the economic and financial growth of the companies. DApps and DEXs, DApps are decentralized apps. I will also touch base with it, not too much, but I will touch base with it through the end of my presentation. Decentralized exchanges, they are just fairly new, a year and a half, not too much. And of course, I will also talk about the governments and regulations. Guys, here's the thing. Cryptocurrencies and cryptocurrency payments, or payments using cryptocurrency channels, are the most important and eminent example of blockchain systems. So blockchain systems enables cryptocurrency payments for service and retail industries without the middleman, let's just call in a very layman language, middleman, which means the third parties involved. For example, I think the greatest example could be the online travel agencies. OTAs are collecting a lot of fees for 10, 15, 20% of the unsold inventory. It could be rental cars, it could be hotel rooms, it could be any travel products, it could be any tourism initiatives, or any service and goods and services, any service-oriented goods and services. Therefore, these fees might not be there once the technology is fully implemented in the operations. So it is just like radio frequencies. One party is going to see another party, and the contract will be based on there. So since I said contract, I use the word contract. The decentralized contracting is also another great advantage of this fairly newly technology, because blockchain has been around for almost 7-8 years. I think late 2010 and 9 and 10. Anyways, smart contracts are the contracts that they self-execute themselves without having to go to any authorization mechanism, for example, in governments, okay, or in companies. And self-contracts are 100% digital. These are the smart contracts in the decentralized contracting system under the blockchain umbrella. So what we can do with the smart contracts in this industry, in financial industry, I will touch base with it. But since we are here, we can do a lot. We can do smart contracts with, let's say, guest book reservations or in airline reservations, or using wallet. Also, I will touch base with it, using the specific wallet that we use under DeFi systems, decentralized finance systems, that we can do payments easily, and we can do business transactions on a higher scale business transactions easily without any messy bureaucratic systems. And of course, investing and financing, lending, borrowing, banking, exchanging, those are very important in service and retail industries as well. And blockchain system, it makes them very easy. Why? Because again, the rates will be maybe lesser, because there is no third party markup or premium in there. Therefore, the rates will be cheaper. And of course, the fiat currency differences, which means dollar euro, dollar versus euro, fiat currency differences will not be in the system. So which means we can do, or any businesses, any corporations do higher scale business transactions and or mergers and acquisitions and or buyouts or any collaborative investment projects easily with the systems. Destin, can you please proceed? What has been done so far is a lot, mostly financial systems. So blockchain systems, blockchain technology, blockchain structure, and the usage of blockchain is mostly adopted by financial industry. When I say financial industry, it is not about economics or anything. It's just the financial services, mostly because of finance, or the term finance, or the financial industry has a lot of sub branches that we can think of, from banking to excuse me, real estate, to audit, to tax, to accounting, so on and so forth. So from capital markets to payments and banking, lending, insurance, trade finance, corporate governance, or regulatory or compliances, these are the most these are the areas that the blockchain is mostly being used right now by the main players. BNY Mellon, Goldman Sachs, and IBM also is providing blockchain systems for their cloud computing and AI systems for any client transactions or any client or business-based transactions, so on and so forth. Destin? Capital markets, what we can see, single point of failure, as Destin mentioned, which is great, decreased cost of capital. For example, if any service and retail related industry would like to raise additional funds for investment projects, the increased liquidity might be the biggest issue, because liquidity, when I say liquidity, is just the available money out there from the third parties, from external sources. So with a decreased cost of capital, which is very important, will be there with the blockchain system, again, because there won't be any third party premium involved in the rates or the cost of acquiring additional funds using blockchain systems. It's just going to be one-to-one, peer-to-peer communication for financial and business system. Asset servicing, of course, how to service those assets, fractionalized ownership. These are the other main areas. Clearing and settlement. Sometimes companies would like to pursue higher scale investments. Clearance and settlement of the funds are the biggest financial pain for them. It might take sometimes months. Even imagine you're doing business with the West countries and the East countries. I don't want to name any country right now. West and East countries. So this could be a hurdle for businesses. Therefore, with blockchain systems, there won't be in clearance and settlements months and months waiting for the clear millions of billions of dollars for the investment projects, bigger investment projects. So this is also applicable for service and retail industries, because service and retail industries, they do need physical assets to put their products in. Therefore, they do invest heavily. They do invest in hard assets. They do invest in fixed assets heavily to grow. Therefore, this will be a golden. These systems will be golden for them. Asset management, again, of course, liabilities, assets, current assets, fixed assets, any other tangible, intangible assets can be managed very well as well. Destin? Banking and lending, I mentioned this. I'm not going to touch base with too much. It will be very easy. It will be very short time of banking and lending. Imagine millions and billions of dollars. So that will be easy. Destin? Trade finance, authentication, documentation, bureaucratic systems, payment processing, all this clearing and settlement. It will be extremely efficient, because again, there won't be a third parties, there won't be any bureaucratic authorization signature, because everything will be decentralized. The hierarchical systems is not going to be in blockchain systems, because it's on the hashes that connects peer-to-peer communication for finances, for financial trade under the blockchain systems. Listen. I would like to talk about regulatory and compliance. So it is fairly new, to be honest. Some countries, some governments, they don't know what to do with the system. They don't know what to do with the technology. Fiat currencies, when I say fiat currency, euro and dollar, imagine the home country's currency I'm talking about. Fiat currencies, they are still intact, but as Destin mentioned, digitally, digitally converting those currencies in digital platforms using blockchain systems will be for the trade finance, for investments, for every single industry as we can imagine. However, again, there are a lot of challenges. Across border overseas firms operations, pace and complexity of regulatory change, climate, regulatory culture, countries, regulatory systems cannot match on trade, e-commerce, investments, finance, lending, banking. Therefore, this regulatory issues and compliance issues will be the biggest hurdle to be widely accepted. I'm talking about blockchain economy to be widely accepted. And the last thing I would like to talk about, where are we going to, Destan? To looking forward, DeFi, decentralized finance under blockchain systems is being accepted a lot by different companies, different industries, different businesses. As we can see in the chart right now, these are the total value locked in the US in terms of US dollars in DeFi. It is increasing in an enormous rate, and I do believe that in the future, any service and retail guest can do transactions using wallets, phones, smart watches, or any wearable access. We are going to use our wallets to do payments for guest protection operation, data collection, data analysis, so on and so forth. And DeFi, which is the Ethereum systems, Ethereum contracts are the best platform for that. And this concludes my part of the presentation. I will be happy to take questions. And Dr. Challenge, go ahead, and stage is yours.
Thank you, Dr. Tan.
Okay, let me share my slides with you. All right, I will try to take like maybe 9 minutes so that we have more time to have this Q&A. So right now I have been doing this research for sharing economy from the marketing perspective. So basically, for retailing industry, the most critical right now is that we are highly dependent on the third-party platform-based digital marketing. As you guys know, that we're highly dependent on Amazon, we're highly dependent on eBay, we're highly dependent on Google, and even Facebook. All right. So this is the first problem for the sharing economy right now. And second is about the customer journey expectation. Right now, it changed a lot. It doesn't mean that we have a good services. It is good because we will go to online and check it out, what other people say about this product. I might think it's good, but after that, I listen to all these comments, I might think not good anymore because this is not perfect enough. So basically, we can't control, we as a retailer cannot control the customer journey right now and their expectation. And the most important right now is that the customer loyalty is no longer with us. They are more towards like with the platform, right? They are more towards with Airbnb, they are more towards with Booking.com. Like me, myself, I'm using Booking.com all the time. So I actually attach to Booking.com rather than the brands of the retailers. So this is a problem right now, I think, for sharing economy. So blockchain is very important because it could provide a solution for retailers, especially with the smart contracts. I think I will not explain a lot about what is the main features or benefits of blockchains. Example, the decentralized network, data provenance, transparency, immutable, and time-spent database, because you can easily get this kind of answer from the internet. But the key thing is that the retailers, let's say we are talking to a retailer because I'm an external advisor for the Helsinki Blockchain Centers. The key problem what retailers they are trying to consider is there are two things, the cost. Because right now, if we use Ethereum, of course, I'm super bullish on Ethereum. It's not because of the price, because of the underlying settlements, the smart contract, the solidity, and especially the EVM. I'm going to talk after this. Is that it is so good. I believe that it could be the underlying settlements for the global settlements. So, however, a lot of retailers might be even to go for DeFi, they have this kind of problem. First, they say this is so costly. I think you believe you already read a lot of news about expensive, right? But we have to bear in mind right now there is something called layer 2 ecosystems. As I show you on here, there are so many other so-called company. We use a Lamington company that actually supports the ecosystem of Ethereum, right? Example, polygons. So basically, we are not necessarily to like every time we run the transactions, then we need to put into the Ethereum node. It doesn't need to do so. We can go into the second layer first. So we do about transactions on the Ethereums. I think this is what it's going to do for Visa. So basically, this kind of costing, the technical part, we can actually solve this one very easily. And the second issue is about centralization and decentralizations. A lot of us have been talking about the cool things or the transparency about blockchain rights. But when we talk to business person, they don't really want to have this kind 100% transparency, because when you tell the transparency, it means that we lose our competitive advantages, right? So this is the problem right now. The retailer might think that, okay, if we go for blockchain, doesn't mean that we share our resources with other people's. Is it mean so? So throughout the journey, when I talk to this retailer, also when I do the interview with the blockchain experts, what we found actually in the real world, if you really want to apply retailers, in retailings, the blockchains, basically we can combine something called, we use a layman term, it's called combine, but for the blockchain world, we call interoperabilities. It means that we can combine integrate between the centralized network with the decentralized network. So go back to one example, because we cannot just tell you that the concept is there, but practically it's already there actually. So Murad already mentioned a lot about smart contract. This is the cool things about decentralized, about Ethereum networks, right? So if we go back to the Ethereum networks, basically it's back up with the EVM, which is the Ethereum virtual machines, which is so-called like virtual CPU in this world. So basically, if we go to the ecosystem, right, EVM, very, very strong development community. A lot of developers actually put their effort in this EVM. So basically, that's the reason why I said that Ethereum should be the underlying settlements for the DeFi, right? So if you look at Binance Smart Chain, Binance Smart Chain actually compatible with the EVM, Polkadots, Polygons, even Cardano. They have like compete with each other to a certain extent. They also can use EVM and etc. There are so many kind of so-called cryptocurrency or any company they will use, even NFT, they will use this Ethereum because of the EVMs. So let's go back to the technical perspective. What kind of centralized networks can be compatible with the EVMs? So based on the first thing is IBM blockchain. I think you have heard about IBM blockchain. If you go back to the underlying technology of IBM blockchain is Hyperledgers. So Hyperledger actually using permission DLT. So from there, you can actually use, as a retailer, you can use a soft tool, Fabric, or Burrows, or Bensu, or other tools under the Hyperledger, such as Castles and Avalons. It actually can apply to these EVMs. So to answer, make it very clear for the retailers, we have to explain to them that we can use blockchain's ecosystem. It doesn't mean that we need to be 100% decentralized. Certain things we can be centralized, so we use Hyperledgers. So it's something that we want to go for open example, especially when Murad talking about these DeFi things. It's very important to have DeFi for retailer, because you can actually get some money from not necessarily from the banks, it's from the publics, right? So you can link something there. So I think this is a very important thing that we need to know about the joint between decentralized and centralized networks. So this is what I'm trying to say. What blockchain means to the retailers right now, I would like to say that blockchains actually come out something new called new informational infrastructures. So it highlights the properties, the informational properties. There are three very important things that which is currently doesn't have. The first one is about authority for data ownership. This is very, very important, because the data you own is by your own company or by yourself. You are not going to freely give to the Facebook or freely give to the Googles. If someone would like to get your data of your customer rights, you can actually monetize this kind of data. So you have the data ownership. And the second is about the granularities of the data, which is, I would like to say, is like a data. You can actually identify which layer of the data you would like to share out, which layer of the data you doesn't want to share out. So this is very important because it allows for dynamic policy management, which is actually practiced by the IBM blockchain. And the third one is about real times. Real-time data is very, very important because it's going to highlight goal for the innovative asset management. This is very critical because while we have a real-time data, we know when we would like to send our stocks to our customer. And our customer, automatically, they have this smart contract. They know that when they can actually make the orders, because they know everything right now. They also know the price, they know everything, because once your shipments, right, you make the so-called the contracts, term and condition, the payment will be made. So it doesn't need to wait for another 16 days or 90 days. So our money will not stuck on so-called like verifying stage. Example right now, let's say I transfer the money, okay, from one place to the other place. Maybe it takes around 24 hours to 48 hours. Take, for example, I would like to transfer money from here, Finland to Southeast Asia. It takes like 48 hours. So I think for the last point, I'd like to highlight blockchain is very, very critical for retailers because it will let us to less dependence on the third-party platform digital marketing, as well as we will have a better understanding about our customer because we will deal with our customers directly. So for future research, I will not going to discuss this one because this is one of papers. I would like to say that for the retail marketing in the blockchain-based sharing economy is going to be a lot of changes. So if you have any question, you can ask me. I think I'm going to end right now. Thank you so much.
Thank you, Dr. Tan. Thus far, this has been a really informative discussion. So I'm sure we have some questions. So let's see the questions from the audience.
Yes, we have a lot of questions actually. Let me start with them. This question is coming from directly for Dr. Destan. The question is, which assets would you like to keep on blockchain?
Thank you so much, Dr. and Dr. Sedandoan. I think this is a very good question. So I would like to have, currently I don't have any real estate, but hopefully in the future I will have my real estate. So I would like to probably have my real estate and like my main stay for a real estate, and maybe also as my summer house to be on chain, which I would like to have. And why is it important? I think this gives me the fractional ownership. If I am not able to buy a real estate by myself, I can have a fractional ownership, which is already on the blockchain. And it can also be the liquidity that I would need if I'm not able to afford this just one huge mansion, for example.
Oh, thank you. That's very interesting. Can you touch on the security of such assets being held, for instance, on the blockchain?
Phil, I think we see the questions over here.
Yeah.
Yes.
Okay. So what do you think about NFT and tourism? In the future, with this technology, there may be new application technologies and even more smart tourism sector. So can we get your thoughts on that?
So I would like to answer this question about NFT. For me, I think perhaps we can use blockchains in tourism rather than NFT, because from my understanding about NFT is more towards like collections. Unless you are going to a certain place that you would like to buy something, then your purpose is not for memory. Then you think that you're going to resell it. When you buy something from Italy, then you come back to the United States, you want to resell it to somebody else in the market, then it could be useful. But I'm not sure how it's going to convince people to go to the tourisms by using MFT. Perhaps Murabs or Phillips, you have other comments about this one?
Well, I do actually. Thanks, Terence. I do actually. NFTs can be used for mostly, I think, not so much individual level right now. That it's as far as I can see, because it has to come down to the level that more and more implementation is and application and acceptance is needed. However, NFTs can be used. Let's say each token can represent the loyalty programs or rewards or that we use right now for airlines, for travel and tourism activities. Each NFTs each NFTs, how much you have, it depends on how much you have, can be used for booking activities, can be used for individual level I'm talking about right now, can be used for also investment activities, as Destan mentioned, fractional ownership, or can be used for reservation activities, can be used for, of course, loyalty programs, or changing seats, check-in, check-out. It's going to be very easy. For the business side, NFTs can be used, implemented in the specific hospitality and tourism exchanges, which is going to be called DEPs, the DEXs. Decentralized exchanges can also be traded via your wallet, because you have to put the token somewhere, via wallet, and that could be another initiative that I can see in the future. But of course, everything has to come down on regulatory basis. Therefore, people are people. When I say people, executives are going to take it from there and accept this technology along with NFTs, tokens, DeFi, so on and so forth, more and more. So that might be the area that I can see right now. In addition to what Terence said.
Yeah, if you like to add something, I think NFT is very important for retailing, branding.
Mm-hmm.
If, let's say, for example, Nike would like to come out a specific collections, then it's only have 50 rights, so they can actually use that NFT, because this kind of thing collection people keep, but people is going to resell after 5 years because it has values. So for retailers, I think we should fully utilize how NFT could apply to the brands, especially for the collections. So I think this is one thing that for retailers can use. I would highly want to, and excited to see what's going on in the future.
Many areas you can, so Terence, many areas you can use, but again, acceptance is important. For example, guest operations, guest transactions, data breach, because you're using the tokens and along with the on the wallet. So it could be everything, or you can just do multiple reservations back to back using the blockchain systems along with NFTs, of course, depending on how much you have. These are the first thing that comes to my mind right now. Again, travel agencies are going to be dead if that happens. So online travel like Expedia or Booking.com that you mentioned for digital marketing, they will be dead if this is accepted widely by tourism companies.
Just I would like to add one point here. Maybe like the utility tokens might be wanting that, for example, the tourism industry or
there we go, yeah,
hotels and restaurants may issue.
Right.
And then you can collect them with the gamification, which is another term right now that's very important and very recent. They can, the users can use these utility tokens, and then with the gamification, maybe they can, if they visit like a restaurant or a hotel, maybe 50 times, then they can have an NFT for them, maybe a representation of like a small hotel picture electronically. So it might be another thing.
Right, just like the punch card we have right now.
Exactly, like customer loyalty.
Right. Exactly. Right, thank you.
Excellent, thank you. So can blockchain, right, in its current form, be shut down? And what does the future look like for it? Can this be something that is banned by the government?
I think it really have to depends on what kind of blockchain you are referring to. Are you referring to a public blockchains or private blockchains? So if you are talking about Ethereum-based blockchains, right, the real Ethereum is not enterprise Ethereum. So I don't think there's a way to really go for shutdown. Just look at the DeFi exchange center like Uniswap. Basically, it could not be shut down, right? If I'm right. So can the government ban it? Yes, of course. From time to time, we actually listen like India, from China, this and that. When they start ban, I think that is a very big, huge impact because when something global you ban it means that other country will actually take advantages. So example, like let's say you ban, then how about a cryptocurrency gain? The country, how the citizens are not going to report their gain, right, for especially for this year and last year. So of course they can ban, but I'm not sure whether this is a good strategy. Yeah. How about others? Destin, others?
Let me add on this. I jumped before reading Destin or Phil, anyways, but let me just add on this. I think the question might be this: if you go backwards, maybe like 20, 25 minutes ago, I said blockchain systems and cryptocurrencies, they are not the same thing. They are the same thing, but they are not the same thing. Cryptocurrencies are the unit of measurement. Maybe this question might be related to cryptocurrency, so let me just clarify on that. Can blockchain be shut down? No, because the blockchain is a system that you cannot shut down. You accept the blockchain system for your operations, inner operations, internal and external operations. So blockchain technology, you can do many things, for data breach, data analysis, data collection, to security fraud system in prevent data breach. However, governments can ban it? I don't think governments ban using blockchain systems, but cryptocurrencies, yes, they can ban it. And we have seen a lot of countries lately that ban cryptocurrencies because cryptocurrency can be used for some fugitive activities and illegal financing. That I don't want to mention any that T word, that I don't want to use it, but illegal financing, of course, blockchain system. I mean, the cryptocurrencies can be banned using. That's why more and more regulation we need for the usage of the cryptocurrencies, because remember, cryptocurrencies are the unit of measurement of the blockchain systems and or DeFi systems. But DeFi systems, since they are extremely private, I don't think anyone can even hack the system. Maybe in the future there will be some geniuses that can do that, but right now I don't see the any chance to do so. Cryptocurrencies, yes, can be used, cannot be used, unfortunately, in Turkey. And but again, blockchain systems, they cannot be banned. It's just the technology.
Mm-hmm. And yeah, and one thing I'd like to just jump in and say that yes, there have been reports of cryptos being used for criminal activities and so forth. But one of the nice things about blockchain is that there's this connection and link, right? So it can easily also be used to trace to certain individuals who are engaged in some of these activities. So it may not exactly be the tools that a lot of criminals seek out to use for their illegal activities.
Yeah. So here, I just want to add one thing, that for the blockchain, you can define it whether it's going to be public or private. So which defines who's going to write on the chain, who's going to validate the transactions. And there is another terms, which is it going to be open versus is it going to be closed, which is who are able to read on the chain. So if you want, for example, to track the votes, we want it to be public so everybody can write on the chain, so everybody can use votes, but not everybody can read because it's going to be closed voting, so nobody reads and nobody sees whom I voted to. But you can define, depending on the situation, you can define who's going to write on it, who's going to read the data on the chain. So there might be no need to ban it completely. And I don't think that's easy to ban these blockchains, but you can define who's going to do it.
Right.
Thank you. So in thinking about the security of blockchain technology, is this something that can be easily hacked?
Yeah, depends on what kind of hack you are mentioning, right? So I think a lot of time we heard about this exchange center is being hacked. Actually, it's because the centralized of the exchange system. It's not because of the Bitcoin itself have been hacked. So I sometimes when we read the news, basically I think the blockchain technology itself, I don't think if there is a proof of words, I don't think it's really can be hacked. Even though I know that some guys in Finland, they are good in quantum computing, they say that it is not possible. So they said at this moment it's not possible. Maybe yes in the future, but right now no. So how about those if there is a way to get your private key, then it's different things. Because some people, they keep their private keys in some way, so that it hacked because I get your private key. The same thing happened to one cryptocurrency I don't want to mention. Its name is just 2 months ago. It just dropped like 0 values, because you can read the interview. His private key something like he put in the smart contract something like people got the private key. So it's not because of the blockchain itself.
Well, scamming and fraud can definitely be there, because you said 12 ledger block keys and private keys, but the system cannot be hacked, but you can be in the system and scam people and then get a lot of fraud in there. So yeah, because proof of work, that's exactly what it is. Proof of work with the nodes, with the line of nodes in the hashes. So I don't think it can be hacked, but the scam and fraud, it definitely is.
Thank you. All right, so we are just about out of time, so we'll have one more question. You can make thousands of transactions using a credit card, but digital coins such as Bitcoin can take a much longer time to process. Do you think they're going to be practical for day-to-day operations?
Yeah, I think the solution is the layer 2 that I already mentioned. So basically, there's a lot of case right now. They are using the layer 2, like Polygon and other, to support before it's go into the Bitcoin's blockchains. So even though I think you can go for centralized first, then only go for Bitcoin, I think it's possible.
More and more adoption makes it very easier with the level 2 and up, and yeah.
Well, thank you so much for your wonderful presentation today. And to everyone in the audience, thank you for being here. Thank you for attending. And we hope that you will enjoy the rest of the conference. And just once again, thank you, thank you, thank you.
Thanks so much, everyone.
Thanks so much.
Thank you so much.
Thank you.